Hello and welcome to another episode of the Silk and Steel podcast. I'm your host, Carl Zha. Today we have crowd favorite Doggy, aka Han Fei-Zi, who is a prolific writer on Asia Times, who writes some very provocative and interesting piece on China's economy. The last time I have you okay, I'm just gonna call you Doggy. Okay, I think it's more endearing because Doggy is what was your Twitter persona. Now you go by what the Blue Bear Monkey.
Yeah, Blue Bear Monkey. Doggy is dearly departed for his past sins.
So for people who not familiar with Doggy or aka Blue Bear Monkey or Han Fei-Zi, check out his column on Asia Times. He has written prolifically on China. But the reason I have you back, Doggy, is because last time you made a very provocative claim that you said China's economy is actually should be much larger. It's much larger than it's been reported. And I believe you said it should be twice the size of the United States, if I remember correctly.
Oh, it's very rubbery. I think twice is the bottom end. My estimate is 2 to 3 times. Now, depending on your count, because none of this is all estimates, so it must be rubbery like that. The midpoint will be 2.5, but the range is wide, 2 to 3 times the size of the U.S. economy.
Now, I kind of wanted to, of course, ask for a source because that's a pretty big claim. And I know, according to World Bank and IMF, they're usually according to power purchase parity accounting for Chinese economy, it's usually about 25% larger than the United States. And then there's a people who point to the nominal dollar terms that shows China is smaller, which it doesn't really mean anything nowadays because that's people need to realize that the nominal dollar terms accounting of GDP heavily depend on the exchange rate, and the current dollar exchange rate is manipulated because they are now currently we're entering a phase dollar is artificially strong, so vis-a-vis yuan, people are posting on Twitter ridiculous graphs that showing that China's growth is, in the dollar terms, China's economy growth is basically negative for last few years, which is completely nonsense.
It'll all turn around this year. So the next year's graph there'll be a big spike just because the RMB appreciated against the dollar this year. So the most destructive thing that you hear on to the West that you hear in Western media is whenever something on CNBC or Bloomberg or whenever these talking heads start talking about China's economy, they'll start out and say the world's second largest economy did X, Y, and Z. Now, whenever I hear that, I think that has gotten the US into all kinds of trouble. Because in reality, China's economy is much bigger than the US. It's not just bigger in purchasing power parity terms by, say, 25, 30%. It is bigger by multiples, 2 times, 3 times. And it's because of the thought that everybody still in their head are using nominal, and nominal has been lowballed just as purchasing power parity has been lowballed, that you run into problems like, Besant thinking that, or Trump thinking that trade wars are easy to win. This is the exact kind of thinking that got the US in trouble when they thought that, they could crush Russia's economy when Russia is just a gas station with an army. This is the exact same thing. When they actually started fighting a trade war, then all of a sudden they find that China has all these resources, all these cards to play, and you get into the Jaws moment when they find out how big the fish is. We're going to need a bigger boat. So what has happened over decades is that China has been lowballing its GDP reports. And this has started in the 1985 was when China first had its first GDP estimate, which is submitted to the World Bank. The World Bank insisted that China start out with a per capita GDP of $250 per person. And the NBS fought tooth and nail and kept it to $180. So right in the beginning, China and the GDP and China and the World Bank had been having these fights. They did weird things. China used to measure its economy, its national accounts, on MPS system. It's a material production system where they do not count services. This is part of the Soviet Leninist economic, how they account for the economy. Right now, everybody uses UNSNA, System of National Accounts. And that does include services. So for the first round out, when China was calculating GDP, it just added 13% to its NPS number and called it its services GDP. 13% is a ridiculously low number. So the idea behind communist or planned economy GDP is that services kind of doesn't count. Services is considered a cost of production. Whether that's true or not, that's the theory behind it. So for decades, China has been, and even when it did go to the SNA accounting system in the 90s, China was given a lot of leeway. So they were actually operating on a hybrid MPS SNA system for many years. Part of it was lowballing its GDP for WTO negotiations, where it wanted to be a developing nation for as long as possible. And part of it was they just did not believe that a lot of these services was really value add. And then, all of that has continued on to today. Now, where is the proof of this? It's all over. You just crunch some basic numbers, you'll get that. One, China's electricity production is about 2.4 times that of the US. How can that be when you are supposedly 2/3 of US economy? China's production of cars are 3 times the US. China's production of ships is like 200 times. And you can go through all of these, not just on the production side, but also on the consumption side. Now, an economist, Rafael Gutmann, is Brazilian, but he teaches in Santiago, Chile. He has very meticulously crunched all these numbers. So every few years, the World Bank does this thing called the ICP, International Comparison Program. And the IPC is what officially sets the purchasing power parity GDP. So what they do is they send people into all these shops, 16,000 shops in China, to compare China's prices to everybody else, just to set all the GDPs to, equivalent. So everything's supposed to be equivalent. So what it ended up with is China's per capita purchasing power parity GDP was almost exactly equivalent to Mexico. Yeah, all right. That's about $24,000 a year. Any Chinese person will go, huh? Mexico? Because you look at any city in China down to the 4th-tier city, they're all more impressive than Mexico City. And just walking on the streets, you can just tell which city is richer and poorer. But if you actually crunch the numbers, as Rafael Gutmann did, you will find that China has been completely lowballing its ICP data, which you're not really supposed to do. I'll read you off some of this data that's pretty stark.
Yeah, before you pull up those data, this reminds me of the recent IMF ranking of the world's advanced economies. And they listed Bulgaria as an advanced economy, but they didn't include China, which totally doesn't make sense. But I saw people saying, "Oh, this is because Bulgaria is part of EU. Its people can easily move across the borders where they can get higher salary, blah blah blah." but still, I mean, look, compare the cities, compare the infrastructures. There's no comparison. But anyway, yeah, go ahead. Sorry.
So for instance, when they list out what the ICP purchasing power parity GDP is, and then you check third-party sources for these line items of how much is actually produced or consumed in that country, you find out that food consumption in Mexico on purchasing parity dollar per terms is over $2,200 and China's 812. And that comes out to be 24 cents per calorie for China and 68 cents per calorie for Mexico. Now, that's definitely possible, but you would have to believe that Mexican food is multiple times better than Chinese food. You run this analysis through a whole bunch of products, and you have the average car sold in China is $12,000 compared to the average car sold in Mexico is $26,000. Now, I know what the price of the average car sold in China is. I know it from third-party sources. I know it because we've covered cars in my old bank. It's $25,000. It's not 12. So that 12, somebody is lowballing over there. And housing, China's housing is half the price of Mexico's housing.
And on the car itself, I know for a fact that for cars that sold in China, as soon as they export it overseas, the price doubles at least.
Yes,
because I own a Chinese EV. Well, actually, it was manufactured in Indonesia, but owned by a Chinese brand, Wuling, and that the same model, same brand in China goes for about $12,000, but Indonesia, the sticker price is like $24,000. It's double. It's double the price you pay in China. Yeah.
Yep. I mean, even this $12,000 that China lists as its average price, we know it's not $12,000, $25,000. Any auto analyst who covers it with third-party data finds all these prices not what is the average actual price of the market. Education, like university education in Mexico, is 4 times better than university education in China. If you had to do the pricing, electricity in Mexico is twice as good as Chinese electricity. So in this ICP data, which nobody checks, but if you do any kind of a spot check, you would find that all of China's numbers have been lowballed. So it's unclear how much we have to adjust for it, but we have to adjust for it for at least a multiple. That's where I get my 2 to 3 times GDP number, where China's 2 to 3 times US levels.
Okay. My back of napkin calculation is I look at electric consumption and I look at the car sales, and that's why I thought, or car sales in China, it's about twice the number the cars sold in United States, and the electricity is twice. I guess now it's more than twice than US. So that's why my back of napkin calculation is 2 times. So I was surprised when you say it was bigger, but I did hear that number before because I was recently traveling in China, in Shanghai. We also met American economists who said the same thing. He said at least China's economy is at least 3 times the size of the United States. So I was just wondering.
Higher than 3. Yeah, higher than 3, I would be a little bit hesitant, but between 2 and 3, it's somewhere around there. If you just did by products, and people will disagree with me on this, you will get like 2 if you just try to equate products. But I also put in a hedonic adjustment. People think Chinese products are extremely low quality, but actually the stuff you get in China is much higher quality than the stuff you get overseas that are made in China.
But Han Fei-Zi, come on. China do not have OnlyFans, okay? That's a large part of the economy that was counted for the GDP, contribute to the GDP. China don't have that. China banned OnlyFans.
Yes. So where is this missing? So part of what's missing is that there is a certain amount of intellectual honesty with the way SNA, the national system of national accounts, that the US uses and Europe uses. And that intellectual honesty is, we will just count everything under the sun. As in, we are not going to make a value judgment of what counts as GDP and what doesn't count as GDP. We will count
in UK, that means they count gambling, prostitution.
Yes,
except I don't know exactly how they come up with that figure, because that's all like part of the gray economy. I don't know how they get their data on the gambling and prostitution.
Field work. I volunteer for the field work to count gambling and prostitution in the UK. So there's a certain amount of intellectual honesty with the system of national accounts, because they just want to count everything. So over the years, for every innovation of SNA, it just got more and more servicey, as in R&D was not in GDP decades ago. Imputed rent was not in GDP decades ago. Lawyer fees were not in GDP decades ago, but they just got added as time went on. And therefore, the US service economy got bigger and bigger and bigger because it just got counted more. Now, we don't exactly know how this hybrid system of China's MPS/SNA system is working, but I suspect they're still making judgment calls. They're saying, this doesn't count, that doesn't count, this doesn't count, we'll lowball this. And there's two reasons why they're doing that. One is, there's many reasons. One is, is the hide your strength, bide your time. You don't want to be looking like you're much bigger than you actually are. Two is WTO negotiations. They want to be a developing nation as long as possible. And three, China it's bending over backwards, trying not to trip into the developed or the high income nation status under the World Bank definitions to preserve leadership of the global South. They always want to be a developing economy.
So is that the only reason? Is that the only reason for China to not want to be classified as a high income economy, purely because he wants to be the leader of the global South, or was it other economic reason before? Okay.
Yeah, there's many. I suspect. I mean, they have given up a lot of their privileges as a developing nation already. So that part should not be a reason anymore. But I suspect they also don't want to do an adjustment. If China really wanted to, it could do an adjustment, and then it will come out that its economy is not, 35 trillion on a purchasing power parity basis. It's 70 trillion. That'll scare the bejesus out of everyone. So I think a lot of it is just inertia over all these years. When they've been lowballing all these years, they just keep on going. The growth rates are, quote unquote, correct. We're just growing off a different basis. So it would be, how do I put this? There is, that meme that goes around, real nigga economy and fake nigga economy. So what I am doing when I say China's GDP is 2 to 3 times, it's twice, and it should get a multiple of 2, and it's about 2 to 3 times that of the US. What I am doing there is pretty much going onto the US basis. I'm saying China's real nigga economy needs to be multiplied by 2 to get it, to account for all the fake nigga stuff that the US counts. Now, or you can do it the other way. You can also do it the other way.
But wait.
Yeah.
Wait, Han Fei-Zi. Let me play devil's advocate for a second. Okay. So people can argue, look, China's electric consumption is twice the number of United States. This can be perfectly explained by the fact that China is a factory of the world. It's manufacturing for everyone. United States is no longer a manufacturing economy. That's why electricity consumption is not so important, because U.S. don't make things anymore. U.S. the economy derive up much more from like intellectual property, which the Chinese are stealing.
Yeah. So what really is the three big things in the U.S. economy that crowds out everything else is housing, healthcare, and education. Those three big things are a huge part of household consumer spending. Now, the question is, where is that in China? As in, Chinese people don't live in housing, they don't have healthcare, they don't educate their kids. So when you calculate that out, I mean, China's education sector is like a fraction of the U.S. Its healthcare sector is also a fraction of the U.S. And its housing, when you do all this imputed rent, or what China does not do imputed rent, or doesn't do it enough, it's also a fraction of the U.S. So what happens?
But doggy, China's housing
Yes.
price is crashing. China's housing market collapsed, right?
Well, in GDP terms, it doesn't matter what the value of the house is. It only matters what the rent or the imputed rent of that house is, what that house generates in value. Well, China doesn't even count that part. China only counts a part of the construction part of the house. That's definitely counted. How much of the imputed rent is a question mark of what's actually in there. So what's really going on is that China hasn't been counting all these parts of the GDP, or these parts of GDP is inflated in the US. So there's two ways to do this. One way is to put a multiple on what China does report, or you can take a haircut of what the US reports. Now, I do the multiple part, but some people have the temptation to do both, but that would be wrong, right? So if you're going to set the US as a basis and you put a multiple on China, if you set China as a basis, then you have to take a haircut of all these things in the US. I mean, the US healthcare is almost 20% of the GDP, but life expectancy is a tick lower than China, and healthy life expectancy is 2.5 years lower than China. I mean, China is a society where people have had, decades of inadequate healthcare when they grew up, in the 60s and 70s, and you still have 2.5 years of higher healthy life expectancy. There's a lot of reasons for this, but lack of healthcare is not one of them.
But Han Fei-Zi, U.S. have the best AI. Like the U.S. the American AI is still world leading. That's gonna fundamentally change the next century. The American hegemony will continue forever because U.S. will achieve the AGI first, and the Chinese will be screwed.
Yeah, see, this is on AI. I kind of take a punt on this because one, I am not the expert on this, and there's tons of people going off on it. What I will say, just from having been around for a long time, is that it has a whiff of all the .com nonsense that I went through when I crashed and burned my startup in the late 90s, early 2000s, where everybody's company was going to rule the world and go from zero to $500 billion in revenue for delivering pet food or whatever it is. And then there's also a whiff of Wunderwaffen in this AGI discourse, where the US has no hope of catching up to China in any other industry, pretty much. It's like a handful. And therefore, all the investment in tech and everything will be dumped into AI because that will solve everything, kind of like the Manhattan Project. Now, it could be true, it could not be true. A lot of it is outside my level of expertise, but the psychological part, as in this is what will save everything, well, I have my doubts, right? So we are already, We're already 4 years into GPT chat when everybody supposedly got a taste of real AI for the first time. What really has changed?
We have
software
a lot
developer
of
has changed. So
80% of the user on social network are now bots. That's what's been changed.
yeah, yeah. So and you don't know whether videos are real or not. So well, we'll see. Supposedly software engineers are now multiple orders of magnitude more productive than we were before. I'm still waiting for the stuff. Right? Where is this stuff? Yeah, we'll see. My son is a CS major, so it affects him a lot as well. So, but to me, it really reeks of the internet will change everything. The .com era of the late '90s, early 2000s.
I remember that. I was going to be a paper millionaire. And so your son is educated in China, yeah, in Chinese university, yes?
He's at Tsinghua right now because he's going to graduate in 4 months. Yeah.
Okay.
So
Congratulations.
He was educated in Hong Kong in the international school system. So he's a Hong Kong admit at Tsinghua.
Oh,
So,
you got the you got the overseas route. That's like the cheating way of getting to Tsinghua.
No. Well, he's not a international student. He's considered a local student.
Oh, wow. Okay.
And he lives in the local dorms and everything.
Okay.
So, but it is Gang Ao Tai, Hong Kong, Macau, Taiwan, which under the Tsinghua admissions pecking order, which every Tsinghua person has it delineated extremely minutely finely from the IMO math guys who come in to the Gaokao guy from Henan, which is like the most competitive province, and at the bottom, slight above the international students, but still at the bottom, is Hong Kong, Macau, Taiwan admissions.
You have a much smaller pool of competition, but still, congratulations. It's a top school, and which this is another talking point by people high on copium in U.S. Why is it then Chinese all rushing to send their children to be educated in the United States then? If China is so great, have such a great university, etc.
Because there's a lot of dumb kids in China. I mean, there's a lot of people in China, and a lot of them are dumb. I shouldn't say that. That's a little bit too mean. But there's pretty much
Chinese school system ecosystem is very competitive. It's hyper competitive.
There are two types of people who go overseas. One is you're absolutely totally just dumb fucks. You have dumb fucks with rich parents who can afford tuition. So dumb fucks with rich parents who can afford tuition, they will go overseas and they'll wind up anywhere. They'll wind up at Vassar, they'll wind up at University of Iowa, they'll wind up, wherever. And then there's this other route. The other route is smart enough kids whose parents say, "Oh, okay, we don't want them to suffer the soul-crushing, lift at the Gaokao, and we will give them a kind of a Western education, which these schools do exist in China, where they can have a kind of a more chilled out time, and they they'll have a shot at the elite schools in the U.S. Your Ivies, Oxbridge. These kids are also made fun of by the elite students in China, by the Tsinghuas and the Beida. They also think everybody thinks these kids are spoiled dumb fucks as well. So both these kids, these routes are now. I mean, 10 years ago it's probably wasn't the same, but now they're roundly mocked.
Yeah, I have to qualify that. That's more of a case in the the last 10 years or so, because back in the
Yeah.
1980s, that was still the top,
Oh yeah. Yeah.
cream de la cream of China's
All right.
intellectual elite that was coming to the United States in the 80s and 90s. I think all the way to early 2000. But after that, yeah, I agree with you. It's more like the economically affluent families were sending their kids to United States. Yeah.
Yeah. So I mean, other proof of why China's GDP is multiples that of the U.S. is just look at how the university rankings as far as the objective scores go, not these other legacy ranking systems that go by reputation, where reputation is like 80% of the score. Or objective ranking, which is basically papers published, which is Nature Index or the lead-in index. Chinese universities are 16 of the top 20. In applied sciences, they're 20 of the top 20, 29 of the top 30. Number 30 is University of Singapore. So you look at, ASPE will do a, key technology report, and China is the lead on 90 out of 100 of them, or 90% of them, not 90 out of 100, 90% of the key technology verticals, China is leading. The US is leading on a handful, but these are the handful that gets the most press. Rocketry, AI, parts of biotech. But it's just a matter of time, and the matter of time that's just a math problem.
Yeah,
China graduates.
Already top 50% of the top AI talent graduate from Chinese universities. They're not even Chinese Americans. They're Chinese from China.
Yeah.
And but the thing is, you made an interesting point earlier. You said all these lowballing of Chinese economy create a delusion among the Western elite that could lead them into some very dangerous decision making. What do you mean by that? What did you mean by that?
Well, first of all, the trade war. The trade war itself was the delusion that the U.S. had a bigger economy, that China's workers needed America's consumers, and that trade wars are easy to win. When in fact, you do not have any leverage when you are a industrial decapacitated country, and you import 25% of your industrial goods. That's a colonial level of dependence.
Wow. Okay. Hold your horses, Han Fei-Zi. I'm going to quote our great Secretary of Treasury, Scott Bessent. Scott Bessent says, we are the consumers. They depend on us. The fact that, we don't have manufacturing anymore, actually, it's on them. They depend on us to continually buy their goods. If we don't buy, they're screwed. What do you say about
that? China doesn't care about America's consumers. What China wants is American assets. That is a trade that's going on. What is happening is a U.S. which is asset rich, and this is perfectly fine. It's how markets work. It's the trade deficit that the U.S. runs against the world and with China is just what will happen when an asset rich economy trades with a productivity-rich economy. So you can't even help yourself. Americans want to sell their bonds, their real estate, their companies, their shares of companies, their
I'm facing the U.S. Congress apparently already awakened to that. They are putting a lot of restrictions on Chinese investment into the United States. This is why they're forcing TikTok to be divested. They're blocking all these sales of different companies to China because they don't want China to cash in on all these asset vouchers, which are like the US dollars. So essentially they want China to hold all these paper IOUs, but they actually don't want China to spend those paper, cash in those paper IOUs, because China can't, they don't want China to buy AI chips. They don't want China to buy American companies. They don't want China to invest in United States. So, the only thing they want China to buy right now is treasury bonds, which...
So
go ahead.
They can keep doing that. And sooner or later, if I was running the US and I had all power, so if I was running the US as a democracy, no, then nothing can be done. But if I was running the US as dictator, that's pretty much what I would do. I would shut down the assets for good trade, because it's the assets for good trade that is de-skilling, de-industrializing the US. Now, there's pain in that. Once you shut down the assets for good trade, then your high-flying, high-compensated industries like investment banking and and Silicon Valley, they instantly their compensation levels will gravitate toward your Zhenzhou process engineer that works for Foxconn, right? So it will equalize everything. Now, but it's better for the U.S.'s long-term security, because
okay, Doggy, isn't that what Trump is doing? Isn't that what Trump is doing right now?
I'm not sure what he's doing. I'm here. Can you hear me? I'm not sure what Trump is doing. Yeah, so I have no idea what Trump is doing. I think he would like to for manufacturing to all come back to the US. Some of it is coming, but the natural trade here is still assets for goods. That will never go away. And that will never go away because it's just structural. It should never go away. America is a fat bird of a country, 2 coasts on the best oceans, secure in the north, secure in the south, temperate climate throughout. Do you really want to work in a dirty, sweaty, smelly factory? Or do you want to be a real estate agent? Right? Give this choice to Americans. If you want to work in a dirty, smelly factory, well, okay, something has to compel them, because they're going to choose to be real estate agents.
That's fair. Do you want to exit and come back in? Because I lost your visual. You are like a dark.
I see me. Okay, I can exit and come back in.
Yeah.
Okay.
We'll just take a moment to wait for Han Fei-Zi to come back, because we have some technical difficulties.
Okay, let me see if can you see me now?
No, I don't.
Okay,
I don't see it. You just dark blank spot. All right, we'll give Han Fei-Zi a couple minutes to come back. This has been a fascinating conversation. I can geek out on this for hours. It's but if you have a chance to go check out Asia Times, Han Fei-Zi is right about these topics, on a weekly basis. Oh, now Han Fei-Zi is back. Welcome back. Yeah.
Okay.
Go ahead. Finish your thought.
I'm not sure. Yeah, I'm not too sure where we left off. But
we're talking about you think you're not sure what Trump is doing, but the asset for goods trade continue nevertheless, because it's structural.
Yeah. So okay. So one of Han Fei-Zi's pieces in Asia Times is it dissects the smile curve. You know the smile curve. The smile curve is what has pretty much destroyed U.S. industry over the last 30, 40 years. The smile curve was developed in Taiwan, where they said the highest value add part of the curve is in R&D and design and sales and marketing, on the 2 ends. The bottom of that smile is manufacturing. Low margins, lots of competition, high capital costs. So we'll avoid that, and we'll work on the fun part, the high value part, the R&D and design, and then the sales and marketing. And then he developed this theory because it was Acer Computer. Acer Computer had all these business lines. He found out that the manufacturing part captured very little part of the value chain. So that's what has been driving America all these years, where Apple doesn't manufacture anything, but they do all the cool design, rounding off the edges of cell phones. And all of that got shipped to China. And this is a low value stuff that Foxconn does, all the manufacturing that is then shipped to the US, and then Nike will then, jack up the price by 500% and collect all that marketing margin. And then all of a sudden they said, the US is de-skilled and de-industrialized. We got to bring that part back. Now, in theory, if you bring that part back and it's the lowest part of the value curve, it should be really easy, should it not? And then they find out that it's so super difficult. And the reason for that, I think, is that the smile curve has been measuring the wrong thing all the time from the very beginning. It thought it was measuring value add, but it was actually measuring Dutch disease and Bohmel's law. Dutch disease is when they discovered natural gas in the Netherlands in the 1960s, I think. All of a sudden, all the capital went to natural gas, and it de-industrialized every part of the Dutch economy. So all the factories closed. It drove up the Dutch currency, and then it became uncompetitive and just started selling natural gas. So it's considered a bad thing. The US is running on Dutch disease, except it's not selling just natural gas. It's selling everything. It's selling treasuries, it's selling commodities, it's selling real estate, it's selling crypto. So it's just asset sales. And these asset sales are leading to high compensation. This is Bohmel's law, where your compensation isn't reflecting your value add. So a lot of these designers and programmers in Apple who think that they are making $300,000, $500,000 a year, that they're so much more valuable than that dirty old process engineer in Zinzo who's making $50,000 a year. But all that is happening is that Bohmel's law, you must benchmark your value to the highest value add in your economy, and that is asset sales. So what happens is, but actually the hardest part of that smile curve is the manufacturing. Elon Musk, he said that the value of engineering, design engineering, is a rounding error of the value of manufacturing. That in the end, all of the really hard work is in the manufacturing part of it. The design, the marketing, all of that is just garbage. So that is what the U.S. economy is kind of running on. It's a lot of the value has been artificially inflated by the fact that it's been benchmarked to the value of the assets that are being sold. It is not actually being benchmarked to the value that's actually being added. When the U.S. is a consumer, it is not that China doesn't want the U.S. to consume. What it wants is the assets that the U.S. are willing to trade for, whatever China produces. Because American assets, everybody wants it. Everybody wants, stocks, treasuries, real estate. The U.S. is the bottomless pit of assets to sell off.
Then why couldn't this why couldn't this asset for goods trade continue indefinitely?
We don't know how long it can continue. But already since the 1960s, when about 0% of the U.S. stock market is owned by foreigners, now it's about over 30%. So you can keep drawing that line. So it's got decades. The U.S. has decades left. You really can sell off Grandpa's farm bit by bit. So
what? Okay. I'm playing devil's advocate here. Okay, what if U.S. continue this asset for goods trade, but you allow China to accumulate U.S. dollars, you welcome China to buy treasury bonds, but you will not allow China to buy U.S. companies to invest in U.S. So in essence, China just getting paper IOUs, right? I mean, United States can just keep on printing money. U.S. can just keep on printing dollars.
Yeah, at a certain point, they won't want it, right? At a certain point, when China figures out that these dollars are worthless because I can't turn it into anything I really want, they'll stop buying it, and then interest rate will start going up, which is already happening. Interest rate, the 10-year in the U.S. is, what is it, like 4.3? In China, the 10-year is like 1.8. So now it's cheaper to borrow in RMB than it is to borrow in dollars, which is, it's already happening. So these things don't happen instantly and the dollar crashes and it stops being the reserve currency. No, it just goes over the decades. The interest rate will keep rising,
But interest rate rising makes the U.S. dollar more valuable. I mean, it pop up the value of the dollar as the interest rate goes up.
You have to pay more for people to want to buy your to lend money to you. So you have to raise your interest rates to bring in that money.
Right, but it also makes it cheaper now that if you hold U.S. dollar asset to buy goods from to continue this asset for goods trade, right?
Well, you got to kind of see where the dollar is going. So the interest rates are rising because there's inflation in the U.S. and then the dollar has been depreciating against a lot of currencies. So they have to raise the interest rates to keep that from getting out of hand. So you got to see what's driving what at this point. So far for the past year and a half, the RMB has appreciated a lot against the dollar, and it'll just keep going because probably China is getting its pockets are being stuffed. It understands that its markets are going to be kind of shut off in the U.S. And its ability to invest in the U.S. will also be hindered. So that's why China's trade with the U.S. and its holding with the U.S. as reserve currency is going down. We'll just see it slowly become less.
This makes me want to pivot to another thing. The petrodollar versus petro-yuan, because for a long time the value of dollar is because it's a reserve currency, and it's because it's a reserve currency because all these countries that needs to buy oil and gas, they need to have a large reserve of U.S. dollars in order to make the purchase because oil and gas was priced in dollars. That dollar valuable. War going West Asia and Iran closing down the Strait of Hormuz and making everybody pay tolls in yuan and pay for their oil in yuan. Would that are we seeing a shift
we're definitely
from
seeing
petrodollar to petro-yuan?
It's not just a petrodollar. It's not just a petrodollar. It's a petrodollar and the Asian export dollar. Those are the things that was keeping the U.S. dollar high in the hog all those years, where Asian exports are priced in dollar, and it will be refunneled back into the U.S. as treasuries, just like Gulf states that export oil, and then they make all this dollars and they refunnels back in the U.S. as investments in companies or treasuries or whatever they buy. Now, China is kind of reversing a lot of this to a large degree. One, a lot less money is funneled back into treasury these days from China. And China is doing the BRI. A lot of this money is more and more of it is being funneled into the global south, which is the way it should be. The way it should be is not what has happened the last 40, 50 years, where developing economies tighten their belts and lend to their rich customers to buy their wares. That's just half-ass backwards economics, and only work because East Asia is East Asia. It's able to do that. It's able to tighten its belt and have decades of sweatshop conditions to become rich. You can't expect, well, I can't expect other economies to be able to put up with that, and they shouldn't put up with it if they don't have to. If China offer, invest, and lend, take China's money, man. This is where a rich economy, China, is investing in a poorer economy, Africa, Southeast Asia, and to develop their infrastructure, their roads, their hospitals, their schools, so that they can move up the value chain and have real industry. They don't have to go through decades of a sweatshop economy to industrialize. So a lot of people were calling the death of the BRI about 2 or 3 years ago. That was just a little COVID lull. Last year, the BRI hit record levels, and record levels that's in 2 times the previous record. So we're back in the swing of things. So this round of globalization, this is the final round. We're final boss now. Last round of globalization was making China rich, bringing China into the world economy, a trading economy. Now that China is rich, the next round of globalization is China developing the third world, developing economies.
Let me play devil's advocate for a second. Can you hear me okay? Okay, so let me play devil's advocate here. So there are people who argue, that by China industrializing, it's blocking the path of industrialization for other countries in the global south, because China just suck all the industry onto itself. Like you said, no other country can probably do what East Asia did, which is like tightening their belt, suck it up, and working very hard, grinding, sweatshop conditions. Like China, because China did that, they're saying, okay, now China is blocking that path of development for other global south countries to industrialize. What do you say to that?
Other economies, global south, poor economies, developing economies, they should not be expected to go through what China did. And they don't have to. As in, they're not even industrialized yet. What they need are not markets. What they need is capital. They can find the markets later, after they got the roads, after they got their solar panels installed, after everybody has basic electricity, healthcare, and education. Then you figure out where your comparative advantage is. Then you figure out, people are operating these days as if David Ricardo were never born, right? So at some point, there was this one article that accused China of stealing all the industries of Indonesia's batiks and these whatever, what do they call it? Rooster bowls from Thailand. I mean, is that what you want these economies to subsist on? A village level handicrafts that they have and when China already has already automated all this stuff. If these economies like Indonesia and Thailand, upgrade their industry, upgrade their infrastructure, then their entire industry will move up to something completely different. I don't know what it is. But I have confidence in comparative advantage. They'll find it. But to say, oh, you should have comparative advantage because of your village level handicraft rooster bowls, you're consigning these people to decades of poverty forever. That's not a real industry to sell these little trinkets to tourists. No, you want to fully industrialize countries, get electricity running, get roads running, get railways running, and then they can figure out what they can really do.
That is very interesting. The hour just flew by. I could geek out on this for hours with you. What is there anything else you'd like to cover on our podcast?
I'll just make one last point, and then we can call it a day for now. The last point is, this was my job about 35 years ago. I was in the aid industry. I was the guy sent over to the third world countries to live there, live among the people, to bring development there. And of course, now I know it was all just window dressing. It's window dressing because the US runs massive current account deficits. It needs to suck in money from these third world countries. They don't have two nickels to rub together. So all I got for that school was advertising that an American lives here and is all cool and shit. And, oh, I can get you $5,000 in school supply, maybe. And then there's a Chinese company building a road right from the northwest to southwest province. And I met them. And this was 35 years ago, before Belt and Road was ever even mentioned. So who did more work? Who benefited that country more? The window dressing American, or that 300-kilometer road that connected southwest province and northwest province?
Yeah, to be fair, a lot of the aid packages that the West provides goes into pay for consultant fees to the Western consultants, and leave very little to actual developmental work. But
we've seen
that
the USAID scandal. Yeah, I used to work with those guys.
Yeah. So for people who want to, learn more from you, where do they find you?
They go to Asia Times and search for Han Fei-Zi. You can follow Blue Bear Monkey, Doggy Dog, on X. Doggy Dog.
Doggy is dead. It's just Blue Bear Monkey, right?
Yeah.
Blue Bear Monkey on X. It's acquired taste. It's acquired taste. Where you have a pose as a colorful personality, horny uncle personality. Fine. But I enjoy it.
If I had to behave myself, I wouldn't be there.
Well, ladies and gentlemen, again, Blue Bear Monkey and Han Fei-Zi from Asia Times. Make sure to give him a follow. And until next time, bye-bye.